Good morning. I'm Peter Milios from the Finance News Network. Stocks fell on Friday, pressured by a spike in oil prices and rising inflation expectations as Wall Street wraps up a volatile week. Overall, the S&P 500 declined by 0.5%, the tech-heavy Nasdaq Composite lost 1.23%, and the Dow Jones Industrial Average was the outlier, rising by 0.12%. On a weekly basis, the S&P 500 and Dow notched gains. The S&P 500 climbed 0.45% to mark its second positive week, while the Dow advanced 0.79%. The Nasdaq was down 0.18%. Stocks came off their session highs after consumer sentiment data was released earlier on Friday. According to the University of Michigan's closely watched survey, preliminary consumer sentiment data slumped in October while inflation expectations spiked. A slew of largely positive reports from major financial firms on Friday had kicked off third quarter earnings season. Shares of JP Chase added 1.5% and Wells Fargo rose just above 3%, while Citigroup ended the day 0.2% lower. BlackRock shares fell 1.3%. United Health Group, which has the highest price per share of any Dow stock, gained 2.6% on earnings. The S&P 500 hit its low on Friday's trading session as oil prices spiked on fears that the Israel-Hamas war could escalate geopolitical tensions in the Middle East. US West Texas Intermediate crude futures and international benchmark Brent crude futures each settled more than 5% higher, posting their best day since April 3rd. December gold futures closed 3.11% higher on Friday, marking the strongest single-day gain since December 2022, also surpassing both their 50 and 200-day moving averages for the first time since September 20th. This performance contributed to a weekly gain of 5.22%, the largest since mid-March, leaving gold up 6.31% for the year, while VanEck Gold Miners ETF and VanEck Junior Gold Miners ETF also saw substantial increases of 4.36% and 5.12% respectively on Friday. Investors also kept an eye on Treasury yields. The yield on the 10-year Treasury was down by roughly 9 basis points at 4.62%. The 2-year Treasury yield was about 1 basis point lower at 5.05%. Yields and prices have an inverted relationship. Investors remain slightly cautious about equities, but are optimistic that stocks could rally in the fourth quarter if yields climb back down and rates move lower. Overall, US sectors were mixed overnight. Energy was the best performer, whilst tech was the worst performer. Shifting to China now, the iron ore imports dropped by 4.9% in September compared to August due to decreasing steel margins, increased domestic supply, and a majority of Chinese steel mills operating at a loss, with further declines expected in October due to reduced demand. The SPI futures are pointing to a 0.4% fall. Thank you for listening.